Hello and welcome to Premier Study in Investing. It's great to have you. Thanks for stopping by.
Hey guys, welcome back. So today we're going to be looking at MRNA, the Moderna stock, and I'm going to do the best that I can to try to make a bear case for it, which is making the case that the stock was going to go down in the future. We are going to be looking basically at mostly trying to look at some of the PE, forward PE ratios and historical PEs that have been put on this stock. So one of the ways I like to think about the PE ratio is basically if I was going to buy a machine, right? And it was going to give me $1,000 a month. How much is that machine worth, right? To me, how much would I be willing to buy that machine for? So that's kind of like the PE ratio. It's the multiplier that you put on top of the earnings to get to the price. We're here October the 5th, and the low was about 118 on the Moderna stock, and then a little bit of rally. We're at 125.62 on the close for today. Low volume. But one thing I definitely wanted to take a look at is that the pink here, it's hard to see, is the 20-day, and then the darker orange, I guess you could say, is the 50-day moving average. And this really hard to see, but slow changing other orange is the 200. So with both the 50 and the 20 below the 200-day moving average, I mean, those are typically bearish signals. I wanted to look at one other thing as well, because the forward PE is something we're going to be looking at a lot, and they have it pegged at 14.31, and I have not been able to quite find out where they're coming up with that number, and they have downgraded their PE just because the price came down, so the PE adjusted. Check out this graph from Y Charts, really interesting in light of what we're going to be talking about. It has the historical PE ratio here, the stock price, 12 trailing months net EPS, which is all very helpful, and then the PE ratio. So the PE ratio is going to be like this number divided by this will get you the PE. So it's really simple, like 234.98 divided by $8 will give you the 29.37. It should. Yeah. Okay, so what you need to know is that during the peak price, you can see here, $384 a share, September 30th, 2021. Yeah, the PE ratio was about 23 times. Trailing EPS was lower, and it was trading, pretty high because expectations were high. They were expecting for the EPS to increase, which it did. $28 over, like looking backwards, 12 trailing months, TTM, that's what that means. And then it continued to increase, yet the price fell. So you can see what happened is really from here to here, the multiple definitely compressed from 30 times down to 23 times, down to 8 times, down to 5, down to 4.35 times, down to 3.83 where we are today. So you're definitely having multiples compression. EPS, we're going to be looking at some of these EPSs. And so $32 is great. Kind of the point is that, yes, definitely you've had high PEs over 30. Here, 106 times, right? So yeah, the PE has been high, but what would make you think that this would continue to be elevated at some type of 13 or something like that, given the trend? 8.9 at the end of 2021, 5.06 at the end of first quarter 2022, and second quarter 2022, 4.3, and today they have it at 3.83. So if we're going to be trying to explain this forward PE, why would it go up? We'll look at some of that, but I just thought that was really interesting to add this chart on top of some of the other things we'll be looking at. Okay. Also, we'll look at is that they've had some pretty massive earning beats, and so this is 11.29. We'll look at this, but 14% beat, which means the analysts kind of missed it here. The analysts really missed it. 64% beat on earnings for the quarter, and then 15% beat. So that's going to be important because, like I said, they're going to be looking a lot at this. So analysts have been at a tough time. And we will look at a woman. I'll just introduce her now. This is Karen Anderson. She is a charter holder, and so she's distinguished. She's MBA from Rice. Somewhere in here, she graduated with honors. I lost it, but she was voted best on the street survey 2013. So she's not new to this, and we're going to be looking at one of her reports. But before we do that, let me just jump back here. We're going to look at, this is upcoming earnings, and we'll look at that second, but we'll start with the historical earnings. So if you go and you look at this teal color, if you want to get basically a ballpark estimate on where they are today on the stock, you would add the 770 plus the 1129 plus the 858 plus the 524. And since those are historical numbers, you'd put the 12 trailing months PE ratio on it, or the PE multiple, sometimes it's called. So if you add those 4 quarters up, you'll get $32.81 of earnings. And if you multiply it by the 4.14, this PE here ratio, you'll get to $135.83, which is pretty close. It's this like an estimate, and it just, definitely the stock didn't need to hang out around here, but it kind of makes sense at 137 versus we calculated 135 and change. So that's sort of interesting. Well, compare these earnings. I said divided by, I'm going to go back, 4.14, right? I had $32 of earnings historically, almost $33 of earnings. And if you add these up, these are the forward-looking estimates, 4.81. Look at those. They're just so much smaller. Maybe they're expecting a big rally for why Q4, not Q3. I don't know. Maybe delays in regulation. I know there's been some delayed orders from Europe. But if you add those 4 quarters up, those forward-looking quarters estimates, there are estimates, $15.65. Now, since these are forward, you want to use the forward PE. But already we're at less than half. And then, so using this 5.14 PE, 5.19, PE, you end up with an $81 stock. So that's fairly interesting. I think the thing to keep in mind moving here is we have an $81 stock based on just what we have here. And then our PE multiples are somewhere between, we'll call it just 4.2 to 5.2 for simplicity. She puts out a report for Morningstar, and with a price target of $232. Now, I just calculated an $81 forward-looking price target, and she's at 232. She says uncertainty is very high, but I thought, wow, that's pretty nuts, right? To have that big of difference in price targets. That's really wild. $232 versus $81 from what we just calculated, based on what Schwab gives us. So here's her name, Karen Anderson, and she's strategist. So this is a whole report. I'm not going to read it. Let's look at FinViz really quick, because they kind of give us some other interesting information. We see basically the same PE, 4.2 historical, but then look at this forward PE of 15.61, excuse me. And the cool thing about this, wherever they get this information from, they have a price target of $217, pretty close to where Karen's was, long ways away from what I just calculated. But look at how big this multiplier is. It's not 5.2, it's 15.61. And the other thing that they give us on here, if I can find it, is they give us a EPS next year dropping. EPS next year of $8.82. Let's do this. Since we know that they have a price target, 217, I'm going to divide it by this number here, the forward PE, since they give us both those numbers. So if I take the 217 price target divided by the forward PE multiple, I'm trying to work my way backwards to get back to see what they think earnings are going to be. And they have earnings at 13.90. That was actually lower than adding all of these up. We were at like 15 something, and they are at, based on this, earnings of 13. And they have to have this huge multiple on there to get to this price target. So that's really, really interesting. One of the other things I thought was interesting, if you're making a bear case and you think the market's going down, this has fairly large beta. Of course, you don't want to probably short healthcare stocks during a recession, if that's what you believe. But if you do take short positions, having a higher beta would mean that it would move more as far as the price action. Okay, let's go over and look at Reuters, because Reuters is really interesting. So here, slightly different, but basically the same, 4.22, and they do not give us whether it's a trailing or a forward PE, but interesting that now we have a kind of a third opinion, and it's not a super high PE of like a 15, it's the 4.2. Okay, well, we never really found our forward PE from Reuters, but we do finally get to some interesting stuff on analyst recommendations. Now, Karen is just one of the many analysts covering this, and most of them have a hold. More buys or outperforms than underperform. But year-end earnings 2022 and year-end earnings 2023 have 19 of those. So I definitely want to look at that. Let's start on this one. So the end of 2022. So we're what is that, like 3-4 months away. Mean estimate on earnings at the end of the year. We'll just take 28 and we'll multiply it by that big forward PE here, 15.61. If you do that, $420 stock. Okay. So that's kind of interesting. If you take the 27 though and put it more like a 5.2 like we saw in the beginning of the video, 27 times 5.2, $140 stock, about where we are right now. So not a lot different than that. You have a high estimate and you have a low estimate, and there's not a big, there's difference there for sure from 19 different analysts. But look at this, by the time you get to year end 2023, and this is what's really interesting to me. The average earnings per share for the year, just call it $9. $9 times, let's take again the high PE of 15, 9 times 15, $135 stock, right where we are. So if it can hold that multiple of 15 times on the PE ratio, I guess it could hold this price, 135, 137. However, if we apply more like that 5, we're really taking a $9 stock times a 5.2 multiple. It's a $46 stock. That's way worse than what I had before. Before I had an $81 stock. But by the end of 2023, it's a $47 stock based on this. And one really interesting thing is you have a difference in the estimates from the high and the low. The high is up at 21, like high. That's $110, $115 stock. But the lowest analyst had them actually losing money, $4.4 per share, negative earnings, or you could say losses, on the stock at the end of the year. So I thought that was really interesting. To end off, they were saying something like $50 in cash. This is 26.2. Okay, so here we'll look on their balance sheet. They have $2,873 in cash and cash equivalents. We'll add all these up. We'll add 2873 plus the 5024 plus the 2691 for short-term liquidity. And we'll go down here, common shares outstanding, divided by 392. These are all in millions. So it's $27 of cash per share. So if you hear someone saying that it was way more than that, like $50 of cash per share or something like that, no, I don't think so. So that's one thing where people might try to set a floor and say, oh, well, it does have very little debt. So they do have very little debt, but they're also going to be spending a lot of money on their pipeline if they're going to try to develop these other vaccine pipelines, like we said, for herpes, varicella zoster, herpes, I believe, HPV, cytomegalovirus, and they were going to run one for HIV. So that's based on information that was from a previous video when we looked at their investor report. But those are some of the things. Currently, we know that they just have the one vaccine that is, being bringing in money, creating sales. So I just think it's really interesting. You can buy. So the June 2023 puts $85 strike, trading right around $6, maybe 85 cents. And then if you want to go out another to January 1st, 2024, these are trading, we had price targets of $81 all the way down to what was it, 5.2 times 9? $46. So it's an interesting play if you want to say, if you're of the opinion that the markets are really going to go down, if some of the economic data, the inflation data, the Fed rate increases. But yeah, these deep out of the money puts are fairly inexpensive. I mean, these are still $700, $1,000, but you have 490 days to expiration. So it may be an alternative to betting against the SPY because of the beta, and because this company does sort of stand on one leg, so to speak. So I guess I'll just end the video where I started. Currently, we have a trailing PE multiple of about 4.2, and we've seen that in other places. The forward PE is 5. In order to get to any of these valuations that they're talking about on, say, FinViz, this $217, or like what Karen is talking about at $232, you're going to need a huge increase in the multiple. We're at 4, maybe it's going to go to 5. For it to go to 15 times, I mean, they're going to have some breakthrough something. And a lot of people, it seems like, are debating whether, for example, they're just debating, naturally, you want something where you need to take it again and again and again. I don't know, but it's hard for me to see how is this forward PE going to get to 15 times. It's been there before. And definitely the stock has traded, outrageously high, $400, $500. So it's come off a lot from those highs, a lot because earnings have come down. And everyone's expecting earnings to come down drastically. From 7, 11, 8, and 5 down to 4, call it 8, 2, and 1. Yeah, that's going to be a huge hit. Even just to stay where we are, you're going to need this multiple to come up a lot to make up for these losses here. I don't see that happening. I don't see it happening. But we'll see. So you tell me if you think that's convincing or not. Please share with me your thoughts. I'd love to hear what you guys think about these wild differences in valuations. And I look forward to it. I'll try to reply back as much as possible. Have a great night. Have a great day. We'll talk to you next time.